weekend. Ira Epstein of Linn Associates with your agriculture update, and this is your weekend edition for Friday, the 22nd of March, 2019. Well, as you already know, the stock market, what a beating the market took today as interest rates around the world are taking a nosedive. The Bund is back under nearly a 0.3% negative. So if you put your money in, you're getting 0.3% negative on that. You just want your principal back, or what you can of your principal. When you're looking at the grain markets, certainly impacted to a degree by the dollar, which is still staying strong at the expense of a number of foreign currencies that are just all over the board. But the day was more about interest rate plays than anything else. Now remember, on our weekend edition, what we do is we look at first a monthly chart, and that's what we're going to look at, a monthly chart of closes in the beans. Then we're going to go to weekly charts. The idea here is the bigger picture, and then on Monday through Thursday, we do the daily charts. By the way, for those of you that get my morning subscriber video, you'll see that I began putting those out today much earlier. So trying to get those out now well before 8 a.m. Central Standard Time. Might even be able to do 7:30 a.m. Central Standard Time to help all you out. In looking at the monthly area chart of closes, the one thing you should look at is where the red line is. It's called the 18-month moving average of closes. That number is 934 3/4. And literally, the market hasn't been able to get back to that number all of 2000, well, for the greater part of 2018, and certainly all to date of 2019. When we take a look at the market from top, where it peaked out at 1071 down to 810.5, and that peak was made, if you take a look, March back in 2018, bottomed out in July of that time, and we've had about a 38% retracement. 50% retracement would be here, and a 62% up at the top there. The market is stalled. Doesn't mean it has to go back down, but it has certainly stalled and been stalled since November for all purposes, right against that area. When I take a look at the weekly swing lines, and swing lines, how they're developed is, I wrote the study. So I look to see, are we having a higher high week, a lower low week, an inside week, and two other rules that I put in. And it creates an indicator that tells you, are you trending? If you believe that a trend is made up on a downtrend of lower highs, lower lows, or an uptrend, higher highs, higher lows. In this case, on the weekly chart, we still have lower highs, lower lows, which is the definition of a downtrend. That is broken if the market takes out 921, the last swing line high. When you look at where the battleground has been for the past month and a half, it's right here at the 18-week moving average. I call that number the line in the sand. And the reason it's the line in the sand is that when the market's above it, often it'll fall to it looking for support. But if it breaks down under it, it rallies back to it looking for the resistance. And when it just starts hanging there, the market's searching for an overall direction. The close this week at 903 3/4 was just over 903 1/4, the 18-week average of closes. So while the swing line is down, the bias, because the market closed, even though it's only half a cent over that number, is up. When I look at resistance, if you were to clear 921, possibly 940's resistance. There's nothing under the market, so let's put on a pair of Bollinger Bands. And what Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. Traders use it because generally the first attack to the upside or the downside is an area, and you can see here, where you run into resistance. Is everything always perfect in life? It never is, but gives you an idea. Now, if you're coming out of real sideways action, which is what we're developing again, you can break out and pop through those numbers. But what you do to find out if it's doing that is you look at momentum and see if it's giving you a story. And momentum in this case is just going sideways. So we have a market that doesn't have momentum, and momentum often leads price, giving us any clue. We have the bias up because you're over the 18-week average of closes and the swing line down. It's pretty much a neutral market. When I look at the soy meal, you've gone from upper Bollinger Band to lower and making an attack again of the upper band. Didn't quite get there. The high this week, 316.40, that number's 317.40. Now, typically, when you get a bull market in the soy complex, meal is a leader. And this market yet hasn't done that. I'll call this just very much sideways. You had an attempt to break out to the downside, which failed, and momentum has turned back up. Your pattern on the swing line is one of a lower low, higher high. I'll call that neutral, and the market keeps hugging back at this 18-week average. I'm going to say it's a neutral market. A market that's recently entered the bearish phase is soy oil. And you can see that you've got the lower highs, the lower lows. The settlement at 28.66 is underneath the 2,900 number, and momentum is pointing down. So this would be labeled, at least on a weekly chart, in a bear phase. Market should have resistance, or theoretically, if you rally back to the 18-week average, you'd have to get over 29.78 to break the bearish pattern. But the way the chart's set up, it would not set up a bullish pattern even if that occurred. In the corn market, you came down with a pattern of lower highs, lower lows, and you can see how this market was working there. Then the first support became the 100-week average with resistance at the 18-week. The market fell down. This is the settlement. Came into that, and the resistance area pretty well held up. Recently, the market, and this was the week of March 8th, now the market started finding its footing. Notice how it went right back to that 18-week average to fight its battle, and it's cleared that this week. But it didn't clear it enough to take out 381 3/4, which is still the swing line. So you still have the pattern of lower highs, lower lows. However, because prices closed over the 18-week average, the bias is up. Momentum is up. Even though if you take out 381 3/4, because you've had a vertical price rise from 352.5 right up to the 380 level, the problem is you will have a lower low, even if you take that out, a higher high. So I'll be looking for that formidable resistance at 388 3/4 should it get there. And the market, to get bearish again, has to close back under 373.5 and get momentum to start slipping down. In the wheat market, you spent a number of weeks pushing to the downside under the lower band. Now, the odds of staying under a lower Bollinger Band, 5% of the time. But when you get consecutive weeks down, what I do is I subtract for each week one of those 5 percentage points just to give me an idea. Is the market got a good chance of staying down further, or is it going to bounce? You had a 2% chance 3 weeks ago of staying under that number, and you got your bounce. But more than a bounce, you had an outside week up, and you closed near the high of that. That first puts into play the 100-week average. And if that gives ground, then the 18-week average could be the next. Right now, this is where you're at, challenging first the 100-week. You still have pretty good resistance up here. In the cocoa market, you're still in a downtrend. You have a pattern of lower highs, lower lows. You're under both the 18 and 100-week average, putting into play then the possibility of support at the 2064 level. Momentum is pretty flat here. It's not pointing to the upside or downside, but the bears have control of this market. In the sugar market, you closed today at 12.57, underneath 12.64, so the bias is down. What the market is lacking is a swing line, because you have a pattern on the weekly chart of a higher high and a lower low. For now, almost 4 weeks running, we have hit the 18-week average of closes. Should this week's low be taken out at 12.43, unless the market took back out afterwards the highs of this, the market would re-enter the bear phase and possibly put in that 1197 zone. Where's the resistance? You're on it in this 1257, 1264 zone. By the way, on this chart, there's nothing that could turn it bullish if you're looking at the swing line. The swing line can only turn down. It can't turn up on this formation just yet. In the coffee market, you have a pattern of lower highs, lower lows. Momentum is still pointing down. I don't consider momentum on weekly charts getting overbought or oversold. Target, if it wants to continue down, 92.21. If you were to take out 96.55 and not break through 92.80, the swing line could actually turn positive. So that's a number that those that are bearish might want to keep their eye on. Resistance back at 130. Cotton market. Cotton rallied to the first resistance zone the 100-week average of closes. And if it can clear that, then 79.45 roughly, the upper Bollinger Band next spot. The trend is up, higher lows, higher highs. The bias up, you're over the 18-week average, and momentum is up. Hit first target. In the cattle market, we had a cattle on feed report today. Let's take a look at that. Let's go right here. The cattle on feed came out at 101%. The estimate was 100. But the bearish part of the report to me is the placements were 102%, where the estimate was 96%, and the prior month 95%. That means there's more cattle. They're just going on the feed. That one of them is all the cattle. This one's stuff ready, and the marketings were not increased. They were 100%. They thought they'd pick up to 101. The prior month they were 103. So in a nutshell, you have more beef ready to come to market. Now the question is, will the market be able to hold the break low if it does drop here? And that break low I'm looking at is the week's low last week of 126.32. The market's sort of churning here. It is in an uptrend. Should prices take that number out with the high this week of 130.45, which is actually the same high you made 4 weeks ago, you could get to the point where you challenge this resistance. The onus is on the bulls right now, but the report came out bearish. And in the hog market, I'm sure you've heard that China is buying U.S. pork, and with that, the market broke out of this sideways action that it was in, and now you're getting that tail end. Is everybody that was short from this whole area, they're underwater, so to speak. Momentum up. Not a trend. It's pretty interesting. You have a higher high and lower low. We'll call this a vertical price rise. It's gone straight up. The word is straight up from 52.25 right up to this week's high of 80.30. It's almost, what, gone up 40% in price? It's crazy. Big, big number. Want to remind you, let me get here. Our research. You know, if you're a grain trader, we write about all this, and we write about it through the weekend, by the way. So when you're looking for analysis on the cattle on feed, believe me, we've written already reports in depth about all this. We'll be writing, as you saw, I had cold storage numbers there, so they'll be covering the OJ, everything that's in cold storage, be it the hogs, everything else. That'll all be there. And if you want to see what we write for our producers, hedgers, it's all there, both option strategies and future strategies. I doubt you get this from most places you trade at. Why not give it a try and see what our research is worth? You know, getting a low commission rate with no service, you figure that out. Here's our number. Go to our website, www.iraepstein.com. All you need to do at that point is you'll see our carousel of free offers. Choose it from there. You can click up here to get one as well. I'm Ira. You have a good day.